trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Well, happy Wednesday live stream day, everybody. I am just, it's fun to do all this and to kind of interact a little bit more with everybody. So today, I just wanted to start off with a couple of announcements. Again, I'm giving out $1,000 before December 22nd. So if you want to go to cryptoinfluencers.com and just subscribe for the free channel, this will give us, then you'll be in the running. There are 10 winners. Everyone gets $100, so it's about a 1 in 9 or 10 chance. Welcome, Dilemma. Awesome. That means I'm really streaming. So that is announcement number 1. Announcement number 2 is that we are having a really nice day. This is the Bitcoin chart. The Fed chair announcement happened right here, right at, it was, let's see what time it would have been, like 1:30 Eastern time, so 11:30 my time. And the news was well received. It sounds like there's a little bit of optimism in the market. I also noticed that unemployment was down up a little bit, which means that there'll be less incentive to raise rates. So there's just kind of a lot of stuff going on. This is the 1-minute chart. So Bitcoin got excited and has hit a high of 17,147. So that's where we are right there. I'm going to switch back to the daily chart. So yesterday, I tweeted out yesterday that we were likely going to have a bullish engulfing candle, which we did get, and what that might mean. And yesterday we started seeing a pretty decent move. Things got a little soft halfway through the day. So if I go to the 1-hour chart, you can kind of see our new day started here. So we had a real good jump, and then we kind of softened for a while. And I think it was because of a lot of anticipation of the Federal Reserve announcements and whatnot. So that all happened, and now we've broken a little bit of higher ground. This is a very obvious bull flag. Just you can see it. Yeah, you can see how clear this is. Clear as day. So bull flag played in the playground for a little bit, and now we've broken out. We're moving up. The target on this type of thing would be this distance. So let's see, it would be around $400 more dollars. So the breakout would be about 17,250, something like that. So that's kind of where we are there. But yeah, so we are definitely loving the Bitcoin bull breakout. This is a breakout we haven't seen for quite a while, and with this breakout, the question will be, what do we expect? Like, where will this end up? We have 4 hours and 18 minutes left on this bar, and the worst thing we can do is lose steam right here and turn back around. We really need to overcome at least this high here, so 17,600, and best case scenario, we touch the 50. That's what we're really after. So we want to see if we can get into that. That's a decent move from here, $1,400. But this is just the start, and I think there's a lot of pent-up excitement that for those that are watching and that are really taking this move by move, day by day. This is a beautiful, like we've been anticipating some kind of a leg up after this massive drop. Ethereum is looking just as good. In fact, we got high enough that our 50-day moving average has curved upwards slightly and put us into a yellow zone. We'll see if it lasts, but Ethereum's looking a little stronger than Bitcoin. And if you're wondering what this blue line is, it's our long-term resistance. It's since April, beginning of April of this year, this resistance has been in play. So breaking above it would be very strong. That would make this a fake out, and then over here we mean business to get out of there. So I've been testing the streaming platform that I currently have, and it's survived an hour and a half recording most recently, but I just don't trust it. So we're going to stream as long as we possibly can. But if you have any questions about any other coins or anything, let me know. Okay, so the other thing I was going to say is I like to look at the predictor. I was expecting, just from the shape of the S&P AI, that we would have a green day. I did not expect us to do much more. I think this might be the last green day. See this 200-day moving average? We're just about to touch it, and I really do not, I mean, unless there's something there that I'm not aware of, but there's a lot of negativity out there, and you can't always believe the news. But I just don't know if this means that we're smooth sailing. I don't think we're going to just break across the 200-day moving average and just go off into space. So I'm feeling I'm feeling like the S&P is probably overdone, and we need Bitcoin to do its own thing and not be tracing it move for move like we've seen in the past. Let's take a look at the AI. So I felt like we'd have a little bit of help from the S&P today, and we're definitely having a green day. And this is where we ended yesterday. So this is the stuff that I was talking to the Pro channel about. That once we put in our end of day data, so this was our bullish engulfing candle here, the odds that we are moving up has completely strengthened. Look how much green there is in the next, greater than 5 days, even in the next couple of days. This was a scenario that was even on the table, 11% move. And so you can see that our average across the board is positive, and it has not been like this for a long time. We need some kind of an impulse to get us out of this rut. The worst case scenario is this one, and this is the one we've been tracing for quite a while. You can see how this move here matches this move. The sort of flat area is kind of following this, and then there's no big drop here, but there is a % difference from prices back here versus prices back here. So this is why this was on the table. Well, we get a couple of moves to the upside and break out, and you'll see that the AI will reject this as a likely scenario. So when I add today's data in there, this could change quite a bit, which will be interesting. David, welcome. So far my streaming is working. This is good. All right, so the very most likely case is this case. And this is actually something that I really think will happen. What I was expecting is that we'd come up and test the 50. If we can do this on Bitcoin, we've gone a little sideways. If we can come up and test the 50 and then find some higher support than right here, that's exactly what this case is suggesting that here we had a much lower low. We kind of flattened out, and then we had a test of some kind to find resistance. And then we cooled off again, and then we slowly retested it, and once we retested it, we were off to the races. And that is exactly the way I'm expecting this to play out. And not only is that the most likely scenario, but it's the most likely scenario 3 times. The second most likely is the 4th, and then the 3rd. So the 2nd, 3rd, and 4th are all the same time frame, and it's all before this next impulse, which I think we're seeing today. So this move up, I mean, this is not very subtle, but you know, there's definitely a lot of history and things built into this, that there's an expectation of a move to the upside. This is another case, and this is actually a little stronger. You can see how this move is way more dynamic. And then, of course, we have our worst case scenario where we're just not quite breaking out away from that. But all of these cases that we're pulling from the past, which is what an AI does, it is pulling data, and it's finding a variance of less than 20%. This is the first data set that we've had where we have 10 dates where I renamed this to variance from accuracy, but it's an 11% and less than 20% variance from our 9 data points that we're pulling from the past to formulate what our most similar experience was in the past. And so our average looks like this. So we have a decent move up, even including the worst case scenarios. And there were three where we were pretty solidly negative. You add all that in, and we still likely will not find a lower low. So according to this, it is very, very possible that we have seen the low for our cycle. This could be our cycle bottom, and it's fresh. I mean, it is 9 days old, but we're here. Okay, so everything is working. This is awesome. Okay, so that's kind of what I wanted to show you on that. Michael, welcome, my friend. Okay, so we're above 17,000. I really don't want to see us get rejected here. That's awesome. So I kind of wanted to talk a little bit today about how a trader is successful or not, because there was a thing that I was reading yesterday, and it was a guy that said in 2021, it was like he was just barely getting into crypto back in 2021. And he said everyone at the time was looking back at the people that bought in at like 3,000 and 4,000 like they were very lucky. Oh, those guys were so lucky to buy at 3,000 and 4,000, and now here we are at 60 and 70,000 per Bitcoin. Oh, they were so lucky. And then he said, now that I've experienced my first real bear market, where I've seen the price drop from 70,000 all the way down to 15,000, and just how like grueling and challenging and emotionally exhausting that is. And then you've got your friends and your family that are telling you you're stupid for investing, and what are you doing, and you're losing money, and you get all of your close people that you've bragged about your excitement about Bitcoin, and they're all kind of naysaying on you. Well, his comment was, I now realize that the people that bought at the bottom of the bear market were not lucky. They deserve those returns because this is hard work. It is hard work to be optimistic or to be buying when we have seen nothing but blood in the streets for a solid, I mean, when was our top? It was November 10th. We have gone for more than a year of really just disappointment, right? It's over a year of disappointment. And if we're still excited over a tiny little breakout over here at the bottom of this, like we are, you know, this is like, we kind of deserve a little credit. You know what I mean? it takes a lot of foresight. It takes a lot of ignoring the noise and being dedicated and really believing in what you're doing to keep putting yourself out there when everything is so red and unhappy. So I kind of wanted to congratulate you that are still here for being here, because what makes a successful trader is not the guy that bought in 3 weeks ago in a bull market and everything's up, so everyone's making money, and that guy thinks that he's an expert trader because he bought during the tail end of the bull market when the hype was the most exciting and everyone was telling him he was doing the right thing. The best traders are the ones that pick times when nobody wants to be buying, and they stick to their guns and they get the best deals. They deal with the most emotional headwinds, but they are the ones that are positioned to make the most when times are looking up finally. So there's no clear indication that the market is over. Like if I didn't know about Bitcoin's economic 4-year cycle, and if I hadn't lived through 3 other cycles before this, it would be really hard to buy right now. At some point it feels like it's going to go on forever, right? But what we are doing is we are finding levels of support. If I didn't know this was Bitcoin, I would know that we had a bear flag here for sure, and then we dropped down and we had a little bit of a sideways consolidation. This last one feels like exhaustion. Like I feel like this is exhaustion. If it was anything else, it would be a little harder to see it. I mean, if this was a company that was making bad decisions over and over, like it would be really hard to buy in right now and to have faith in that. But it's there is reason in the chart to be optimistic. There's a little more reason to see on the weekly chart though. One thing that I've never really talked about on this channel is there's a thing called bullish divergence. It's when prices are dropping, but the indicators are improving. And if you'll notice down here, I'll just pull this up. This is the RSI, and look what we're doing down here. On the RSI, we're actually finding support, and we're showing more strength. So when you're seeing a decline in prices and an increase in sold off momentum indicators and things like that, and I believe the MACD is doing the same thing. The MACD is showing more strength, even though we're still trending down. That means that a massive reversal is coming. So there's plenty of reason, even technically, why we're at a place where we should be interested in going long. But still, in theory and in practice are 2 different things. So that's kind of what I wanted to talk to you about. Like, how do you really define a successful trader? The successful trader doesn't get all of the, he doesn't win 90% of the trades. A successful trader isn't just bagging everything they put money into. That's not what a successful trader does. You talk to anyone who's been investing for a long time. For example, I had an old college professor that was a bond trader, and he was trading and he was in positions. He was actively still trading as he was teaching, but he just kind of had a humility about him because he'd just been through the war, And that's exactly what a seasoned trader knows. They know they're at the mercy of the market, and things can go wrong. What makes a successful trader is somebody who knows how to manage risk. They're not going to put themselves in a place where they're going to fully wipe out everything they've got in 1 or 2 dumb trades, and they're going to be able to roll with a lot of punches. And then when finally things get going their way, they don't get that kind of relief syndrome where they're like, oh, I finally got my money back, I'm out. No, they have a little more foresight and self-control to stay in positions that are winning and let the market do its thing. So there's a lot more. So let me just catch up on comments really quick. So David's saying that he has his coins off exchanges, but he's buying, which is awesome. Totally right thing to be doing. Ryan says it's a classic bearish retest. Too much instability and events going on in the world to deny the fact that we're in for some serious economic meltdown. We broke through previous all-time highs. Think about it. Yeah. So that's the challenge. Is we can't do anything about central banks, right? Central banks, they're running their own machine. They have complete control over money supply, and I'm not going to sit and say that they're trying to ruin the economy. I don't think they are. I think they're trying to do the best they can, but it just so happens that they won't lower interest rates until unemployment gets high. So people do have to have a reset, and it's really, there's a lot of painful things that they're forcing, they're deciding to do. And that's, crypto is meant to exit that system. People have to have a little bit more ownership over being overextended or doing stupid things, because nobody's going to soften money supply. Nobody's going to change interest rates or do anything to try to make for an easier economic environment. The economic environment is what it is, and we have to roll with it. And people will hurt themselves, or they'll make successes of themselves just based on their own decisions, and there's no middleman to dictate what happens. But it's ironic that the price of Bitcoin is tied into global markets to a certain point. Because if people are poor and people lose their jobs and people are struggling out there, do you think they'll sell their Bitcoin to keep things going? Yeah, they will. So global economic hardships will cause Bitcoin to go down. There's no question about it. But should it fully be reliant on central bankers, irresponsible decisions, depending on the way you view it? It shouldn't, in theory, but it's all very global. So we kind of have to go through our things. Do I think there's a chance that Bitcoin could do well even in a macro global problem? I actually think it can. And I know I might be among the minority, and maybe I'm wrong, but what I really think is there's a lot of money out there, and there's a lot of money that doesn't know where to go. There's a lot of people who have a ton of cash on the sidelines, and they just don't know where to put it. Keeping it in cash is a guaranteed problem when inflation is as high as it is. So they're sort of cheering on the interest rate rises and stuff, people that actually have cash. But if Bitcoin was able to get through the bottom of its bear market and start showing real support, like we finally break above this point. This marker right here is probably the biggest test, 21,300. The top of the move before the FTX thing happened. If over the course of whatever it's going to take, we get above this and start breaking through this line, it will be so obvious that there's a complete turnaround in the market, that people with cash on the sidelines that aren't sure where to go, they may have more confidence in Bitcoin. I think it's possible. I think it's probable. That's why I have the belief that I have, is that there's so much money out there and it doesn't know where to go. And if there was a place for it to go, it would go there. That's just like economics, right? The question is can we get Bitcoin to a place where it can convince smart money that this is a safe place to go? And that's the real challenge. So really, really interesting thoughts there. Thinking about bad actors in the market, Bitcoin is fully running. Yeah, I mean, it doesn't look super pretty. I mean, even the S&P in the last couple of months looks better than Bitcoin. But we definitely were dealt an interesting hand. This FTX thing, if it hadn't happened, I think we'd have really started a very strong move. So we're still in building phase. But what more can go wrong? I'm not entirely sure, but I think there's a strong case to be made that, fundamentally, there's not a lot more that can really be strongly negative in the fundamentals of Bitcoin. And when I say fundamentals, I'm talking about news events. The strongest case for a fundamental problem with Bitcoin and a downside is miners selling. So we have seen a very, very, very strong evidence that miners are capitulating. Bitcoin's been depressed for so long, and miners had this attitude that we were going to never hold. We'd raise money in other ways. That now we're starting to see price depreciation because of miners selling to keep their operations afloat. Rather than go bankrupt or do something like that, they'd rather sell their Bitcoin stashes that they have, and we're seeing it. There are headlines out there. I should have pulled up some of this beforehand, but that we are seeing higher levels of miner selling than we have in the last 7 years. So if you can imagine miners that have had a stash that they've been saving for more than 7 years, for 7 years at least, and that they're letting go of that to keep their operations in place, that's desperation. Like, this is what the bottom of the bear market feels like. It's this desperation of like, oh, we've got to be able to survive this, and people are making decisions that they wouldn't want to. But those are the ones that have the strength. Like, miners have more Bitcoin. They've got a lot of Bitcoin. They're the ones that really could materially move markets down. Well, guaranteed they're going to be selling as little as they possibly can, and the fact that they've sold as much as they have is probably says that they were hurting for, it was kind of the last thing. Well, if they get low, or if they've exhausted what they can, boy, there's a lot of upside, because all of that selling pressure was not only absorbed, but now it'll stop and things will move to the other side. Our move to the upside today, our 17,000, is a little bit of relief. And you'd think that people that were desperate would be selling into this, but with 4 hours left, we're near the top of our candle. Our daily high is only $100 higher than where we are now. So that means that there's a lot more faith in this candle than there is pessimism. So if we close up near the top, we are likely to see a continuation. And my fears of a rejection at around 17,000 will go away. And I really don't think they're founded. I just know that the shape of this chart would be ugly if we reject it here. All right, let's take a look. So Bitcoin is a risk asset. Someday it may be a secure asset. Yeah, it has a way to go. Once governments start adopting Bitcoin, that's where I think Bitcoin will make that change from risk to a security asset. If governments and central bankers are actually acquiring Bitcoin as a means of stabilizing their own country's infrastructure, Bitcoin's made it. Like, now everything's different. And when will that happen? It's when Bitcoin becomes extremely expensive. No countries are going to invest in it to move the dial at this point, because countries are the worst investors ever. If you think that you're a bad investor, or your uncle who lost his house is a bad investor, governments are the worst. You can't convince, because governments have to go off of public opinion. And when is public opinion most favorable for the price of an asset? It would have to be during a bull market when everything's great and nobody can see the downside and everyone's clouded by greed. So it would have to be in a case when it becomes so big that it's even possible, for one. And of course, there are plenty of central bankers and IMF, top dogs that are not interested, that are trying all they can to tear down Bitcoin, but all it does is validate the reason for Bitcoin to exist. So I haven't really been too worried about all of that. So I'd like to become a member, but I don't know what the investment requirement is, and if I use a specific exchange, is there a video that explains the process? To become it's really just being a subscriber to the pro channel. So you go to cryptoinfluencers.com and just click on, well, first of all, you have to sign up. So some people have missed that. You have to just sign up for cryptoinfluencers.com just as a user. And then you can go and click on pro channel and just subscribe there. When you do that, the purpose of those videos are to, it just gives me a chance to show you what trades I'm making. And it's very transparent because every single trade I make, you're witnessing it. And the reason is, I'm working on some things. Like I'm actually working on a copy trading thing on MEXC Global, MEXC Global. And if I get some of those things in place, then there's a lot lower barrier to entry and that type of thing. But what the Pro Channel really does is it allows you to hear my thoughts. Here's the evidence in my thought process. Here's where I'm willing to take risks. And if I have to pivot, like if there's a subtle change in my strategy that I want to implement, you'll hear all of my thoughts. Like why would I do this? Like in this case, here's a material change in risk. Here's a material change in opportunity. And where are we in the stages of the Bitcoin 4-year cycle? This is the type of entrances I'm looking for in this particular time of year. Because believe me, I'm not going to be trading the same way at the bottom of the bearing market as I am going to be trading at the top of the most bullish cycle. At that point, things will be completely different. We're going to be looking for short opportunities and all the while managing risk. But my personal journey in trading is that I was never formally trained on how to trade. But what happened is I learned enough about the parameters, and I made some mistakes to kind of figure out where the limits are. And I do have a degree. I have a master's degree in finance, so I'm educated in a certain way, but nobody's going to teach you how to trade. And in fact, nobody really wants to show you how to trade. They'd rather keep the facade that they're an expert, even though they really don't know how. They just make themselves look smart, and then they try to convince you that they have some kind of an edge. And my pro channel is just kind of strips away all of that. Like you watch me make mistakes. You watch me lose money on trades. There's a heavy number that I'm upside down on because of this FTX thing. This kind of took me by surprise. There was a lot of evidence in the chart that we were building momentum rather than about to see the rug pulled out. And so I had to make a couple of adjustments and make some pivots. And now, we're, things are going well, and they'll continue. In fact, they'll get better. And that's kind of what makes me a little bit different than a lot of the other people, is that I'm actually trading alongside. So you can see how that works. We haven't heard much from Michael Saylor or El Salvador lately. Depends on how hard you're looking. But they're always saying stuff. Michael Saylor is actually extremely bullish on Bitcoin still. I listened to a podcast or something. It was a Spaces, actually. And he was talking about his things, and it really is thought-provoking about, it was probably the best case I've heard of that positive regulation would be a good thing. In my mind, regulation just looks like a great big axe, and it's hard to get past it. And he's like, well, what are you giving up? And he's asking some good questions. Like, we already don't have privacy. That was just, the idea that crypto created privacy really is not the case. We're all KYC'd. Everybody knows everything. Governments know exactly what you've got and what you're moving around. And so we're not giving up privacy by having regulation come in. The main fear of regulation is that we're worried that somebody's going to tell us to stop, or they're going to make it impossible. And that would be damaging. But the regulation that he was talking about was more of, can we just fill out a piece of paper to say, okay, in order to do XYZ, I just need to fill out my paper. Oh, thanks. Now I can actually build, and I can actually use this technology in commerce or whatever. I'm like, whatever. You know, crypto was built so that we could be our own bank. Well, regulation or no regulation, that's not going to change that. We can still hold our own coins and transfer them anywhere we want. Regulation just means, does the exchange, are they using the money properly? Are companies operating legally? And all of this secret privacy thing, it only serves people who are in leadership positions that are doing shady things. And I know there's a case for privacy. I believe in my own personal privacy, but I feel like the people that are screaming the loudest against regulation are people that probably need the regulation. Anyway, I digress a little. It's just kind of interesting. What do I think about Solana? Let's take a look at Solana. Let's see. Here we go. Couldn't find it. Oh, there it is. What do I think about Solana? Well, I know that Solana is a large percentage of Solana is held by FTX, and so there's a lot of fundamental reasons to be scared of it. But, I mean, how far can something go down before you have the ability to, everything kind of has its range, right? The trading range on Solana, it's lost 68% of its value because of the FTX thing. And at a certain point, it's like, how much more is it going to lose? I don't think anyone that's involved in the bankruptcy and unwinding of things, I mean, they're going to look for ways to liquidate to, make investors whole. But in many cases, if the liquidity isn't there, or if they see that they're going to damage a market, irrecoverably or something like that, there will be, guidance to be put in there. I feel like if Solana can improve its structure, that it's a fine buy. I would totally buy this. See, our 50-day moving average is still up here at $23, and our current price action is at 13. So if we can consolidate for long enough that the 50 comes down to where price action is, I'd be all over that. It's just a matter of timing. I wouldn't be buying it right now personally, because it takes time for markets and people emotionally and fundamentally to digest big moves in a market like this. So it just takes a lot of patience and self-restraint. And in fact, that kind of continues the conversation we were having earlier on what makes a successful trader. I think that, when you think about the morality of trading, what are you building? You're not really building anything. What are you contributing to society? Not too much, right? Like, there's not a lot of positives to say about being a trader for a living, right? Well, what I've discovered over my years of trading and doing this professionally for 5 years or more by now, and it is a lot of self discovery. Like, it's humility, it is self-discipline, it is training yourself to have a clear head and to still take the same types of risks even when the market is against you and things like that. It's a lot of overcoming your own weaknesses and your own reservedness, I guess. Whatever your reservations are, to stick with what you truly believe in and make smart, sensible moves, and to do it consistently, to manage risk even when you're frustrated, or manage risks when you're scared, managing risks when you're really excited. It takes a lot of discipline, and I feel like there's a lot of personal growth that comes out of becoming a successful trader that is worth the journey. So that's kind of what I think I see in that, and me sharing what I've learned and things is almost more of sharing self-discipline and selling sharing the things that I've learned about, you know, how to tune out the noise and be a kind of a stable mind in a really emotional place. It feels like I'm giving something back. So that's kind of what's drawn me to doing all of this. All right, so can you share what you're doing for leverage? I feel like now might be a time for getting into a long leverage for the first time ever. Everyone is telling me I'm crazy and that seems bullish. Yeah, that is the thing. That's exactly what the pro channel's for, is to teach exactly how to do that. I'll give you a little bit of insight though, because the principle, even though I can't show it to you in action unless you're part of the pro channel, the principle is you're still not spending money you don't have. If somebody gave me the option of I've got $10,000 to invest, right? I can either take that $10,000 and I can buy $10,000 worth of Bitcoin or Ethereum. And if I'm interested in keeping that, keeping my leverage or at least my money on the exchange, then I've got $10,000 on an exchange. I've got $10,000 of Bitcoin and I'm in a certain spot. And then if somebody gave me the option of could I do a 200x leverage thing? Well, I can. And how I do that personally is I still take just a $10,000 position. But what I've done is I've done a 200x leverage on 50 bucks because my $50 investment is the equivalent of a $10,000 exposure to Bitcoin. So what I'm doing is I'm keeping my $9,950 worth of Bitcoin or whatever capital I want off of the exchange in my own hardware wallet, and I have a $50 exposure on the exchange. Well, that's not always true either, because if the market goes against me, I need to be able to have enough to cover that position. So I will slowly put in $2,000, $3,000, $4,000 to cover that position to make sure that it doesn't get liquidated as, while we're finding the market bottom. Once the market has found its bottom and things are above, all I need is $50 to keep that position open. And at that point, I can keep in a little buffer and still pull the rest of it off. And I essentially have my full exposure because I've got my $9,950 of Bitcoin in my own cold storage. But I also have a $10,000 Bitcoin long on an exchange that I only had to pay $50 for. So I'm all about leverage. Where people screw up with leverage is they go, oh, I can take my $10,000 and make it the equivalent of a $10 million Bitcoin buy. Sweet, I'm gonna do that. And then they do it, and then what happens is the market goes down like 0.5% and they've lost their $10,000. So how did that benefit you? By having zero risk management and being greedy, you just got massacred. And what little you had is completely down to zero. Well, I'd rather double my exposure with leverage, but have almost no exposure. Once the market's going my way and the bottom's in, I only have to keep minimal resources on an exchange to keep my second position in, and that's kind of what I'm teaching you. Anyway, it's interesting. I have a Dogecoin position that I bought into, and it is a 200x leverage Dogecoin position, and I only put in like 30 bucks. Like, why would I put $5,000 or $10,000 or $20,000 into a 200x leverage place when I could have a full position if the market's going my way for only 30 bucks? And if things go against me, guess what? I'm going to need $5,000 because I don't want to just lose my money for no reason. But this particular position, it cracks me up because even though it's really only made 10% of what my original exposure is, according to the exchange, it's up 1,870%. So 1,800%, you can see how people get really swept up in the noise and excitement of trading, because they think, oh, if only I had to put a house worth of money into that. Like, no, you do not do that. That's an amazing way to lose your money as fast as humanly possible. What we want to do is we still want to make small trades, because we have to match our risk, because so the upside is unbelievable, but the downside is also unbelievable. Like when it's going down, it's really painful. So you have to be super risk averse and make smart decisions. And you might be upside down, like if this same position was down 10%, it would show that I'm negative 1,000%. And some people just emotionally can't handle that. But I've learned to pull myself back and be like, you know what, this is temporary. We're at the bottom of the bear market. This is when we buy. And I can deal with a little bit of red for the several months that it takes to really find that bottom. And when things turn around, when the sky is blue and the market's green and everything's moving the right direction, suddenly I don't need that extra 10,000 or whatever of exposure on the exchange to cover my positions. I can kind of pull that off, keep it in a better place, and I still have my full exposure when things are going my way. So lot to learn and things, but it has less to do with getting lucky and being smarter than the market than it is being risk averse, making small sensible trades, and being patient. So that's kind of what that's all about. But yeah, leverage can kill your account if you get yourself into a position where you've overexposed yourself. I have a kind of a litmus test for that. If you're losing sleep, you're over leveraged. And I've done it. I've made some mistakes even this year. You'd think I was a little smarter by now, but if I'm losing sleep, that's a pretty good reason why. That tells me that I've done something. My risk management was off. So I hope I'm not an idiot being out of Bitcoin. I plan to get in at around 15,000. What are your thoughts? My thoughts are, I would stop having a number. I would stop having a number of when you're going, like what price you're going to pay for Bitcoin. My recommendation, and obviously this is not financial advice because I'm not credited to do that, but mine is not a number, it's a time. If we're a year from the cycle top and we're threatening cycle bottoms, I'd be DCAing the crap out of this. If I was in a cash position, I wouldn't be married to a specific number, because people that are married to a number will always be disappointed. They'll either be disappointed because they bought at 20 and now we're at 17, or they'll be disappointed because they wanted to buy at 15 and now we're up to 40 because they just missed the bottom completely. But if you're looking at it from a time standpoint, I'll go back to our halving example. See these big arrows where the halving events have happened? If you are trading in such a way that you know that a year from the top you need to be averaging in, then don't worry about price, just start averaging in. And same thing here. We're a year from the bottom. Oh crap, I missed this. I missed the bottom, and not only that, it's gone up 100% from when I got in. That's okay. Just average in as we go, because this is the year to be averaging in. After you've finished the year of downward, we have a 6 months to a year of sideways. And if you're averaging in anywhere, people aren't waking up in the night thinking, if only I'd have gotten it at 172 versus 300. Because if you bought it at 300 or 172 and the price is 10,000 or 20,000 or now 15,000 or 17, nobody cares. No one cares except for you at that time. And same thing will happen here. If I bought in at 19 or 20 because I thought the bottom was in, and now we're here, Who cares? We just keep averaging in. It's just we just do that, and then when we finally enter sideways consolidation stage, and then finally, more importantly, especially leading up to the Bitcoin halving, things are well on their way by the time the Bitcoin halving's in place. So from now over the next year, if we're slowly averaging in now, I can't even tell you what kind of dividends this will pay once we finally hit the halving. And then 2 years after the halving, it's that time cycle of, it's time to start averaging out. Like it's now time to start taking profits. Oh, but everyone's so excited. Oh, it's going up $5,000 a day. How could I sell now? It's just that time. It's just the top of the cycle, and we have to be measured and smart about it. So same thing. So that's kind of my advice there. Hola, Telecoman. And from the halving, or from the peak, 1 year from those points, yeah, so I've done a couple of videos on timing. What's unbelievable is that the time from, so if I go to a weekly, just kind of strip away all the noise, the weekly from the bottom of the bear market to the top was 152 weeks. The bottom of this to our top was 152 weeks. Like unbelievable, right? And then the top to the bottom last time was 52 weeks. And from the top to the SBF crash was unbelievably 52 weeks. It's a complete mirror. So would I be buying right now, whether it's at 17,000 or 15,000 or even 20,000? Yes. If you have no Bitcoin, I would be averaging in once a week. Don't get so excited about hitting a specific dollar. The time is absolutely perfect. And what if we're wrong? What if the 4-year cycle turns out to not be a thing, and it does go down with the rest of the market, like everyone's shouting from CNN? Well, this is the time to start. A year from now, you'll even get a better deal, and it's not going to hurt you, especially when the bull market starts. But it's hard to believe anything that comes out from CNN or anybody out in the news. I think news is misdirection. I don't think it's actual news. It's hard to know what really is going to happen, because over the past month, when the S&P, everyone was shouting that the world was on fire and that everything was going down, and that was when we had broken a new low. And on the news, it was like, we haven't seen this price since, and then they go over to here and they're like, oh wow, 2020, it's been 2 years since we've seen a low like this. And everyone's hair was on fire. And then now for 2 months straight, we've gone straight up. It's always misdirection. And whales love new lows because they can buy in easily. Do I think we'll keep going? No. Now we're going to start hearing headlines like, hey, we're on a huge recovery, everything's good. Interest rates weren't so bad. We're probably going to get a softening on the federal, on the heightening of interest rates. Things are looking up. Well, now I'm starting to get worried, and that's how I'm just a contrarian at heart, I guess. I've just always kind of been like that. So yeah, here we are. Market closes in 30 minutes, and we've just passed the 200-day moving average. So lot of excitement over in S&P land, but I'm nervous because I'm seeing macro resistance. And yeah, anyway, I'm not a big drinker of news. Do I have any alts as long-term holds? That is a great question. And the answer is only one. There's only one alt that I really believe in, and it's Ethereum. I think Ethereum has the right structure, the right economics, the right fundamentals with the merge. I think the exposure to institutional investment, I think it's just a dang smart long-term hold. I think everything could probably be pretty safe for a long-term hold right now, because if this really is the bottom of the bear market and we're moving sideways and up for the next 2 years, it's pretty safe. If I switch over and look at the total market cap, this is total market cap in US dollars, and then I'll layer on top of that down here, I'll put everything excluding Bitcoin. So now we're comparing Bitcoin with, you know what? I'll just put Bitcoin on top. just Bitcoin. Look at the shape of the chart. Bitcoin goes up, every alt known to man goes up on average. Bitcoin's down, all the alts are down. We have our little move, you know, the layers are the same, the peaks are the same, everything's the same. So the only thing that's different is look at this, how we've kind of flattened out. I think alts have actually lost less than Bitcoin has. So I think there's actually slightly more strength in alts. So on average, if I have a basket of alts, I'm probably happy to hold that for a pretty long time. Because if Bitcoin really is in the bottom of its bear market and we're going to start trending up, it will drag everything with it. Does that mean that I believe in every project? No, but I'm an investor, and I know where my risk and reward opportunity lies, and there's a lot of opportunity there. So that's why I have a lot of exposure to a variety of different alts on these other markets. But my kind of long-term holds that I'm kind of holding through ups and downs, I have is Bitcoin and Ethereum. Those are the two ones that I believe in the most. Okay, well, I think I've been at this for an hour, so I'm going to wrap it up. But let's just get one last comment. Red X says, I thought the bear market started from this year, June, but it seems most are saying it's from November last year. I'm not sure now. Has it really been 1 year? So the answer to that is that it has been a moving target. If we took this as our peak, then the time difference between this peak and this bottom made a really strong case that this was the bottom. If you used this as your market cycle top, because the time difference was significant. Like we had waited enough time for the bottom to be in for this, but because we were proven wrong, I mean, nothing helps change your mind like a little evidence. Evidence is we did get a lower cycle low, and it happened 9 days ago. And so if you take this bottom and you go back from this high, well, it's just about the same period of time. So it's kind of like, I think we've definitely put in the time. And then when I even took a further step back and said, okay, well then let's stop trying to measure the peaks, because the peaks are a little questionable. What we really need to figure out is what doesn't change. Like where is an anchor on this map? And the anchor is the halving event. So if you measure it from the halving event, this is a much more likely bottom. This would have been premature. And I didn't even see it because I was so excited about the bottoming in. Plus, you know, timing, and we had already gone through so much downside that, you know, I mean, it's just human nature. I don't profess to get everything right, but I do profess to be in a place where I can manage risks and roll with what comes. And that's what keeps me going. And that's what makes me good at what I do. So, all right, you guys, that was fun. That was cool. It was awesome that everyone got here. I know I said 12:15, but I think it will be closer to 12:30 on Wednesdays. I think it works out a little bit better. So we'll just shoot for that time frame in the future. But thanks for all of your questions. It was very engaging as far as, you know, your ideas and thoughts and whatnot. So I'll leave you here, but we'll do this again every Wednesday. And even during times when, you know, things are insane with kids and holidays and all that excitement, we'll still do it because it's just fun. But stay safe out there. Be smart with your trading, and we'll catch you next week. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.